So as I've been saying for the last 2 weeks that the overall Wall Street will be on the range, and it's been happening. You can clearly see how Dow Jones, S&P and Nasdaq has been moving, and the similar kind of trend is indeed played out, and that's why it is indeed fair to remain inside the range, and the price will be or will move in the same direction for the last 2 weeks the least, and it will be in the range for the next 24 hours. I'm saying because tomorrow or on 1st of February we will have the Fed meet, and most importantly the commentary, and then the market will decide its move. So for the next 24 hours it's nonetheless be a wise decision to stay within the range, and it's not about how much what will be the interest rate. That's been already factored in by the market, but it's important it's important to focus on the commentary and how the market is going to react on it. And if you don't know how to read the commentary, then wait for the market confirmation. Okay, then wait for the stock market to react accordingly. So what do we have here? As far as the Dow Jones is concerned, the levels are very specific and clear. So you have your immediate resistance of 34,200 and 34,620. These are going to be the big resistance on the upside. Simultaneously, the immediate support that we are going to look at, and this is much more relatable to the intraday trend, that Dow Jones will move towards 33,433, which will become your immediate support, and after that we have 32,980, and then we have 32,675 and 32,589. So the downside, you have a downside even within the range. You have a downside of nearly 3.25%, and on the upside we have 2.5% that is open for you. So even as if you're looking at the price chart for intraday perspective, it's going to be a very sharp move on both the side. Okay, so this is something which we need to look at as far as the range is concerned. Now talking about the Nasdaq, because it's very important to focus on the Nasdaq, and Nasdaq will be a big scenario, I would say, or the volatile case over here, because 2 days ago I have talked about the breakout, but then again Nasdaq is again started falling, and it looks like, as you can see, the range is intact and it hits the upper end of the range. It gives you a breakout, but turns out to be a false breakout. As of now, we require confirmation. We definitely require confirmation, and if there is no confirmation from Nasdaq, obviously a big downside is now open for you. So what we can do here is consider 11,500 as your immediate resistance and big resistance of 11,580, and if it continues to trade below, if Nasdaq continues to trade below 11,500, then a big downside which we can see, and it will be in between 10,200 and 10,300. This is what we can see as far as the downside is concerned. So a big downside is now open for you, and you can clearly see what the range looks like as far as Nasdaq is concerned. Also, S&P 500, when we have a volatile trend for Dow Jones, and Nasdaq looks relatively weak, or if it does not hold on to its level, a downside will open up, and simultaneously you will see a similar kind of move as far as S&P 500 is concerned. So it hits the upper end of the range and started falling from there. So if you are looking at S&P 500, we have a specific range to look at, starting with 4,098 as far as the top is concerned, and 3,764 is the bottom. So this is what we are going to look at for S&P 500. So if you don't know how to deal with this kind of situation, and if you are not a pro, then obviously stay out from this kind of market. As I told you, wait for the market confirmation and then act accordingly. So this is the end of the video. Thanks for watching.